It's Tuesday, the 15th of June 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The Group of 7 meeting supports Australia's fight against China, and a free trade deal with Britain is expected to be signed later today. That's our main story. Also coming up in today's podcast, Fortescue Metals wins the right to run a $100 billion project in the Republic of Congo, Macquarie Group buys into one of Italy's biggest toll roads, and the incredible auction where £5 was worth $1.4 million. Immediately after the podcast, stay listening for my interview with Daniel Petrie about philanthropy, or the lack of it, in Australia. But first, here's a brief look at markets. Wall Street was mixed overnight ahead of a 2-day meeting at the Federal Reserve. The Dow Jones Industrial Average was down 0.7% in early afternoon trading. The S&P 500 was 0.3% lower, and the Nasdaq was 0.4% higher. European markets were generally higher, with the Stoxx Europe 600 up 0.3% and London's FTSE up 0.2%. Local markets were closed yesterday for the Queen's birthday long weekend, having ended at a record high on Friday. Oil prices have come off their peaks over the weekend, but remain close to 2-year highs. Gold prices have fallen since last week, hitting a 1-month low of $1,845 an ounce before bouncing slightly. The Aussie dollar is trading at 77.1 US cents, and the Global Supervisor of Banks has nominated Bitcoin as among the riskiest assets to hold. The Basel Committee on Banking Supervision said the banking industry faces increased risks from cryptocurrencies because of the potential for money laundering, reputational challenges, and wild swings in value. As a result, if banks want to hold Bitcoin and count them as an asset, they'll be required to hold it almost as much in currency, effectively as insurance. It gets a bit technical when you start talking about capital adequacy guidelines for banks, but in essence, the Basel Committee has given a thumbs down to Bitcoin. That should put pressure on the cryptocurrency, but Bitcoin has jumped sharply in recent sessions after Tesla's Elon Musk said the electric vehicle maker would resume transactions with the digital token once its impact on the environment was lessened. Bitcoin is currently trading above $40,000 a unit. Australian Prime Minister Scott Morrison is hoping to sign a free trade deal with Britain later today, ending a successful trip for the PM, particularly given the final communique of the Group of 7 meeting pledged to tackle China's less friendly practices. Australia, more than most, has suffered at the hands of China's aggressive stance in the region, having been hit with excessive tariffs or bans on a range of exports from beef and barley to coal and wine. The G7's final communique specifically pointed to China's market-distorting actions. While the United Kingdom and the USA were clearly more critical of the world's second-largest economy than Germany, Italy and France, the meeting did support Mr Morrison's argument for standing up for liberal democratic principles in the Indo-Pacific region. The communique included reference to a multi-billion-dollar project to fund green infrastructure projects in poorer nations, taking on China's similar Belt and Road Initiative. It committed to net zero emissions no later than 2050, though it didn't make any financial commitment to help developing nations lower greenhouse gas emissions or deal with climate disasters. Also, the timing for phasing out coal-powered plants was part of previous communiques, but not this one. And the communique included a pledge for 613 million doses of COVID vaccine. The meeting marked a new era of collaboration between the big powers, the US, Canada, Japan, the UK, Germany, France and Italy. President Joe Biden said America was back at the table, and he promised to re-establish American credibility among friends. Mr Morrison is hoping to sign a free trade deal with the UK over the next 24 hours, but that still lies in the balance. The sticking point remains agriculture, with Australia unhappy about the proposal to phase UK tariffs and quotas on beef, lamb and sugar over 15 years, as well as rules around labour mobility. Mr Morrison and his British counterpart Boris Johnson are due to meet later today to strike a deal, the first by Britain post-Brexit, though there's still a chance it won't be concluded. Trade Minister Dan Tehan said it was important the right deal was struck. All in all, Mr Morrison's first major overseas trip since the end of the pandemic was successful. He pushed Australia's role in the Indo-Pacific region and was one of the loudest voices critical of China. He was able to have his photo taken with all the major global leaders outside China's Xi Jinping and Russia's Vladimir Putin, and that doesn't hurt politically. In a moment, the rest of the news you need to know this morning. In overseas news, the reign of Israel's longest-serving Prime Minister Benjamin Netanyahu has ended after the country's parliament voted in a new government. The right-wing poster boy won 4 elections in his 12 years running the country, and he will be replaced by Naftali Bennett, an ultra-nationalist whose Yamina party controls just 6 seats in the 120-member parliament. The new coalition government will include, for the first time, an Arab party. NATO met over the weekend, that's the Transatlantic Military Alliance, and it warned that China poses systemic challenges to the rules-based international order, citing disinformation, Beijing's military cooperation with Russia, and the expansion of China's nuclear arsenal. And shipping costs are soaring even higher. Transporting a 40-foot steel container of cargo by sea from Shanghai to Rotterdam now costs $10,500, more than 5 times normal prices. It means everything that travels by sea, and 80% of the world's goods fit into that category, from food to toys to furniture, could end up more expensive. Transport prices are rising on the back of much higher demand, a shortage of containers, overly busy ports, and too few ships and dock workers. On to local news. Fortescue Metals chairman Andrew Forrest has secured the inside running on developing the world's largest hydropower project, which has a $100 billion price tag. The project in the Democratic Republic of Congo is part of Mr. Forrest's ambition to diversify the iron ore miner into a global force in green energy and hydrogen, according to a report in the Financial Review. Fortescue Future Industries has exclusive rights to develop the Grand Inga project, and the Congolese government has said all parties wanting to support the massive development should now deal with Fortescue. The government said the miner's track record in delivering huge infrastructure projects made it the right partner to help develop the dam proposal, which also includes projects in Kenya and Ethiopia. Congo is among the poorer nations in the world, rich in cobalt and copper, which are largely controlled by Chinese interests. Say what you like about Andrew Forrest, but he is certainly a big-picture man. Macquarie has taken a stake in Italy's biggest toll road network in a $14.6 billion deal. A consortium that includes Macquarie was set to pick up the asset until Real Madrid soccer club owner Florentino Perez made a last-minute pitch. But the Macquarie Consortium, which includes an Italian state investment group and US company Blackstone, over the weekend was successful in buying 88% of Autostrade per l'Italia from the Benetton family. The asset includes 3,000 kilometres of toll road across Italy. The seasonal flu has disappeared, at least so far in 2021. Normally the virus has been detected tens of thousands of times by this point of the winter season, but according to a report in the Sydney Morning Herald, experts say it's almost disappeared. In May 2019, there were 30,000 confirmed cases of influenza. This year, there were 71. Experts said the best guess was that it normally is imported from overseas, but of course this year, the borders have been closed. The inquiry into Crown Resorts has been extended by 11 weeks, triggering speculation that the gaming giant might have to work very hard to keep its licence. Commissioner Ray Finkelstein requested the extension at the end of last week. While the knockback of a licence in New South Wales for Crown's yet-to-be-open Barangaroo Casino was bad for the company, it didn't impact its share price. Not having a casino in Melbourne is a whole different story. And since the inquiry began, Crown's share price has fallen 7% in a rising market. Domino's Pizza Enterprises has paid $79 million for 157 Pizza Vest stores in Taiwan. It's the group's first foray into Taiwan and part of Domino's growing international business, which includes Japan, New Zealand, France, Germany, Luxembourg, Belgium, and the Netherlands. Domino's business relies on expanding the number of stores and expects to operate 1,500 outlets across Asia over the next decade. A Boston-based investment manager and former US Navy lieutenant will take over the running of AMP Capital, the fund's management arm of AMP Group. Sean Johnson will take over at the end of the month. The job's been in flux since last year when Bo Bahari was forced to step down following allegations of poor behaviour towards a female underling. AMP's share price, which fell as low as $1.06 less than a month ago, has risen 15% since then. Gaming group PointsBet said it had signed a deal to provide online and retail sports wagering in the state of Maryland in the US, subject to regulatory approvals. It has done a 10-year deal with the Riverboat on the Potomac Group. I've been a bit captured by the PointsBet story. Their gaming group primarily operates out of the US and has been able to offer wagering services as state legislation around gaming across the US has been relaxed. Right place, right time, with a disciplined business strategy. Its share price has doubled over the past year and is up more than 1,000% from its bottom in March last year. There's always plenty of action in the smaller end of the market. Mainstream Group is a fund administrator for fund managers, superannuation trustees, and listed companies. It does all the paperwork, basically. Its share price is up 130% over the past 2 months after receiving a takeover bid from Apex. The board of Mainstream is considering the offer. And 2 Australian coins sold for about $1.5 million each in Monaco over the weekend, the highest prices ever for an Aussie coin. According to media reports, the coins were a £5 coin minted in 1921 in Melbourne, one of only 7 made, and a George V sovereign minted in Sydney in 1920. Stick around, up next is the Fear and Greed Daily interview. Today, my guest is Daniel Petrie, AO. He's the founder of venture capital group Airtree Ventures and a former senior executive at Microsoft, working closely with Bill Gates. He's also a philanthropist, and he says it's time to overhaul the way we do philanthropy in Australia. Daniel is proposing some pretty radical changes to force wealthy Australians to do the right thing and help out those less fortunate. It's a stance that's proving somewhat unpopular among high net worth individuals, but it certainly is a fascinating conversation. That's up next in the Fear and Greed playlist. And if you were enjoying the Queen's birthday long weekend yesterday, then there's plenty of good listening to catch up on. Yesterday, we released our weekly podcast, The Week Ahead, where economist Stephen Koukoulas and I look at what's coming up in the world of economics. And yesterday's daily interview is a good one. It's a chat with Fred Chebesta, the founder of Finder.com.au, who started the business with a schoolmate and has wound up on the AFR Young Rich list with a fortune of more than $200 million. That's all available in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Tuesday, the 15th of June, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.